Hi, I'm Amy Lenz, Senior Director of Enterprise Learning at Money Management International. Today, we're here to talk about the Advanced Child Tax Credit for 2021. We've got a lot of great information, so let's get started. A tax credit reduces the amount of taxes you owe, dollar for dollar. Tax credits can be non-refundable, partially refundable, or fully refundable. Let's look at that now. Meet the Lopez family. They wonder what the difference is between the different types of tax credits, the type and amount of a tax credit they might be eligible to receive, and the amount by which it might reduce their taxes owed is based on qualifying criteria for that specific tax credit. For example, income, marital status, number of dependents, and other factors. You may have heard of some of the many tax credits, such as the Earned Income Tax Credit, the Child Tax Credit, the Child and Dependent Care Credit, or others. Non-refundable tax credits will reduce the amount of tax the Lopez family owes, possibly down to $0 depending on how much they owe and the size of the credit. If there is any remaining value to the tax credit after their amount owed reaches zero, the credit will expire. They do not receive any money back. In this example, if the credit is $2,000 and the Lopez family owes $1,000 in taxes, their tax bill would be reduced to zero and the remaining $1,000 of tax credit remains unused. With a partially refundable tax credit, if there is a credit remaining, some of it may be payable to the Lopez family as a refund. In this example, the Lopez family qualifies for a $2,000 tax credit and their taxes owed is only $1,000, leaving $1,000 in credit remaining. Usually, with a partially refundable credit, a part of it is refundable based on qualifying criteria. In this example, the Lopez family would receive $500. In the last example, you can see that a fully refundable tax credit means that the full amount of the tax credit remaining can be refunded to the Lopez family, in this case, $1,000. Tax credits are different from tax deductions. Tax deductions reduce the amount of taxable income on which taxes are calculated, while tax credits reduce the amount of tax owed dollar for dollar. The child tax credit reduces the amount of tax you owe. You can receive a credit for each eligible child in the household. The child tax credit reduces the amount of tax you owe based on 6 criteria: the age of the child at the end of the year, the relationship of the child to the person claiming the credit, whether the child provided more than half of their own financial support during the year, whether you or someone else claims the child as a dependent on their federal tax return, citizenship status, also for residency, whether the child lives with you for more than half the year, and whether you live within the United States for more than half the year could impact the residency requirement. Residents of Puerto Rico, American Samoa, the Commonwealth of Northern Mariana Islands, Guam, or the U.S. Virgin Islands, or a resident of one of the freely associated states should check the IRS website for information specific to their status. Criteria for child tax credits have varied over the years, and current tax laws govern all eligibility criteria. You can view the eligibility criteria at www.irs.gov. The child tax credit has been around since 1997, but as part of the American Rescue Plan, Congress enacted some changes this year to help families impacted by the COVID pandemic. The goal was to provide an advance on the 2021 credit, similar to the economic impact payments received in 2020 and again earlier this year, in order to help struggling families pay bills and meet essential needs. It's called the Advanced Child Tax Credit because families will receive an advance on their 2021 tax credit in the form of payments that start July 15th. Let's take a look at the changes you can expect. Children who are between the ages of 6 and 17 at the end of 2021 qualify for a $3,000 tax credit. That's up from $2,000 in prior years. Children who are under the age of 6 in 2021, including any children born in 2021, will qualify for a $3,600 tax credit, and that's also up from $2,000 in prior years. The income criteria for the expanded credit includes modified adjusted gross income, or AGI, of up to $75,000 for single filers, $150,000 for those who are married and filing jointly, and up to $112,000 for those who file as head of household. The IRS bases this on either your 2019 or 2020 taxes, and the tax credit is fully refundable at those income levels. Above that income level, you may be eligible for part of the tax credit, though it phases out at higher income levels. Normally, you would have to wait until your 2022 tax return to receive this credit. But as part of the American Rescue Plan, beginning on July 15, 2021, the IRS will send eligible families an advance of half of that refundable tax credit, and this will be divided over the remainder of 2021 into monthly payments. That means you would receive between $250 and $300 per child via direct deposit, depending on their ages, for the remainder of 2021. You would then claim the remainder of your tax credit for 2021 on your 2021 tax return when you file it in 2022. Even if you don't file a tax return, you can still receive this credit. For those who aren't required to file a return, they can visit the irs.gov website to complete an update form to receive the tax credit. If your family has had some other change in circumstance, for example, if you've had a baby in 2021 or you've had a change in income, you can also visit irs.gov to update your information. Families who do not want to receive the advance, they can opt out, also through a tool that will be available on irs.gov. If a family opts out, they will claim the tax credit when they file their 2021 taxes in 2022. Families come in all shapes and sizes. Whether or not a child is eligible for the tax credit depends on the 6 criteria I mentioned earlier, including their age and their relationship to you and/or a spouse. Your child, stepchild, foster child, adopted child, brother, sister, or a descendant such as a niece, nephew, or grandchild could be eligible. To obtain a full list of the criteria, visit the Frequently Asked Questions, or FAQ document, available on irs.gov. If you have eligible children and meet the other criteria for the 2021 child tax credit found on the irs.gov website, you will start receiving the advance payments on July 15th unless you opt out. What should you do with that money that you will now have in your monthly budget for the next 6 months? The advance on the tax credit is designed to help families who may have been impacted by COVID, those struggling financially. Some Americans are struggling more than others, so we've come up with some suggestions on how to make the most of your advanced payments. Remember, there will only be 6 of these payments from July through December 2021. First, if you are struggling financially, use the advance to pay priority expenses. If you are behind on rent or other bills, use it to catch up. Use it to stay current on housing, utilities, and to purchase and supplement necessities like food, transportation, childcare, or other priority household needs. If you are able to cover your priority expenses every month, next, look at establishing an emergency savings account. Did you know that the average American household cannot cover a $400 emergency without relying on borrowing, primarily through credit cards? With the advanced child tax credit, you could have $1,000 in an emergency savings account by October, or even sooner. If you've been meaning to start your emergency savings, this is an opportunity to make that a reality. If you've got an emergency savings established, next, look at your debts. Do you have high interest credit card debt or other consumer debt? Use the advanced child tax credit to work on paying down or paying off that debt. You can create a rapid repayment plan. MMI has a great video called Put Your Debt on a Diet and can show you how. And if you're in solid financial shape with emergency savings and little or no debt, consider using this short-term windfall to fund savings for longer-term goals, including your child's future education. This presentation has been for educational purposes only and should not be considered tax, legal, or investment advice. Please consult a qualified professional regarding your personal situation. I hope you found this information on the Advanced Child Tax Credit to be informative and helpful. If you need financial or housing counseling, please contact us at 866-215-2227 or visit us online at moneymanagement.org.